Hello everybody, my name is Derek. Today is Wednesday, the 20th of January 2010. This is an economic update. Overnight, the Chinese government was stating that they don't want their banks to be making any loans over the short-term time frame, which has caused the markets to fall both in China and in North America, as the mainstream media reports. And you're pretty much damned if you do, damned if you don't, as far as this whole lending is concerned. I've said this before and I'll say it again. If you don't lend money, what happens is businesses are not able to be able to get their business ventures on the ground, and thus jobs would not be created and the unemployment rate can only continue to grow higher. And if you do lend money, then the problem in that situation is you create a much higher debt total. If, say, a successful business was to get $1 million and their business idea was great, they make a whack of money, and they're able to pay the loan within a decade, they might pay back, say, $1.3 million or whatever. And that means $300,000 would be paid back and towards interest. Interest only goes towards debt. And even though they are not in debt, that means that $300,000 must get transferred amongst other different people. If you want to know more on how interest and the monetary system works, the best information I can give you is to check out either the Money as Debt series or the Zeitgeist series. In YouTube, check in the more info, and you can click on any of the names to see the videos. Now, we're in a system where we have the rich getting richer, poor getting poorer, and a lot of the big companies are making a lot of money. As we move into earnings season, what you're going to be hearing is all of these companies making a ton of money. IBM stated that they made $13.4 billion net profit in 2009, which was up from their $12.3 billion in 2008. And you're going to hear from almost every different company. Yes, some companies are going to lose and go bankrupt, but a lot of them are making money because we live in a capitalistic, greedy society that has the rich getting richer and the poor getting poorer. And if you've ever played Monopoly before and you've seen late in the game that anyone who doesn't have that many properties, has no monopolies, is going to get destroyed by the ones that have got the better properties. That's the way the game of life is working also. And that's why it's a guarantee that many people are going to have difficult times as jobs start to go down. People don't have too much money, and inflation thus only becomes a bonus in the sense of being more difficult. I don't want to say bonus being a good thing, but even prices stabilizing makes it difficult when you're trying to live on unemployment benefits. And if you lose the unemployment benefits, then what do you got left? As Gerald Celente says, when you got nothing left to lose, you'll lose it. And that's pretty much going to happen. Moving on towards the stock market, I was saying on my technical analysis video on the weekend that we had the sell-off on Friday, which looked like stocks falling off a cliff on the weekly chart, but it was only a 1% loss. Tuesday, the stocks got those losses back, and today we've been down around 2% as of lunchtime on all three major indices. What can I say? I guess it's because of what they said in China. Nonetheless, is this a stock market top? The only ones who know that, I would guess, would be the powers that be and potentially maybe some of the greater psychics. I am neither one of the two, and to find a top, you need to start to see signs. Some of the signs might be a pattern of lower highs and lower lows. That hasn't developed yet. Maybe you need to see some of the key moving average starting to turn over, and that is the 50, 100, and 200. That hasn't happened yet. And maybe you want to see at least 23.6% of a retracement on the highs that we are reaching now to the 2009 lows. That hasn't happened yet. So there's no signs within that level that there is a top. And in fact, if you want to speak technically, you look at the highs of 2007, you subtract that number by the lows of 2009, and in the S&P 500's case, that gets you a total of $909.30. For the 50% retracement, you need to divide that by 2. That gives us $454.65. You either add that from the bottom in March of 2009, or you subtract it from the October 2007 highs, and that gets you a total of $1121.44. That is the exact number on the S&P 500 for the 50% retracement. Therefore, we are now at about 1130-ish or so. So what you want to do is you want to see it break the resistance, which it has, come back to that level, and then find the support there to go higher. So that shows a bullish sign within the cache, and the only bearish signs that we can have is, fundamentally speaking, at this point, for there is no technicals that is showing, no technicals showing bearishness, unless of course you look at the inflation adjusted chart, then we are very, very bearish. Nonetheless, we're going to move on to gold now, and gold has been getting hammered today with the dollar strength, as gold has fell below the 1110 mark. I mentioned in December of the 1100 mark as support. We ranged between about 1080 and 1120, so that was a key support level. It has went higher and has started to sell off, and we are showing signs of what looks like an inverted cup and handle formation. And if this support gives in, that means the next key level of support on gold is roughly going to be about 1030. And the reason for that number is that is the 2008 highs, and the 200-day moving average right now is about 1004. So by the time it meets up, they should meet up together. And then, of course, going below that, you got the 1000 even number. Now I want to talk about the markets in general, because I've said before that it's nothing more than a paper Ponzi casino game. And there's no evidence to say that it is not, when you have so many people that have lost a lot of money because they're day traders and they might be smart and disciplined, but they keep getting stopped out and they lose. Maybe they're unlucky or they're not skilled enough. And maybe they're like everybody else. They buy high and they sell low. But a lot of people have lost within the stock market. They're not going to tell you it's gambling. If you go to an online stock site like E-Trade or Toronto Dominion, they're not going to say, please gamble responsible. If you have gambling problems, call Gamblers Anonymous at this number. No, they don't do that. And to me, that shows how dangerous and how scary that the game really happens to be. But what I find even more scary is this. Imagine a poker online site that the site decided to put a whole bunch of different computer bots that were very good, and that won them a bunch of different money, because normally a poker site makes money on rake fees and tournament buy-in costs. But if they were to add on to that by having poker bots winning tournaments for them and winning cash games for them, that would be even worse. And imagine if an online casino decided to hire a bunch of professional poker players to play for them, and then they won a bunch of money. Well, that's the way it is with the stock market. And I'm saying that because the ones who control the stock market, which are the bankers, are playing within the stock market. You look at what Goldman Sachs has, high frequency trading, and to think that they buy high and sell low, no. They buy low and sell high. So when you are buying, they are selling, and when you are selling, they are buying a lot of times. I look at things like the 2001 September 11 attacks. There's a lot going on that was there was information known in advance about the attacks, and if the bankers had information about it, do you think they would have sold a bunch of stocks in 2000 and then into 2001? Well, the stock market was starting to make a pattern of lower highs and lower lows. So every time people were buying stocks, yeah, I think it's time to sell a bunch of our stocks. Boom, market's down 4%. I don't know, I'm just saying that if you did know and you were greedy, what would you do? To me, the evidence states that they probably would sell a bunch of stuff. I'm going to finish this off with the dollar index. The index today has got to about 78.40-ish or so. And the 200-day moving average is coming very close. It's at about 78.70-ish or so. Therefore, we are getting to an area where resistance could potentially be found. It's also a double top area because when the dollar had a major rally, that's where it got to before it started to sell off. I was also mentioning in one of my previous vlogs that when it got to this point that I was considering shorting the stock market at that point, I have thought about it long and hard over the last month, and I'm deciding that I will not do it. Do I think it's a good trade? Boy, do I ever. However, part of me needs to do two things. One, leave the financial system the way it is, and in order to make that trade, you got to be playing within the financial system. And two, I got to stop gambling because gambling is problematic whether you are winning or whether you are losing. And this is nothing more than a calculated gambling. And what can I say? I was expecting a rally in the dollar to happen at some point, and it's happened. Then when it hit the 200-day moving average, I was expecting it to be the top. And we'll see in time if it does become that of a top. Nonetheless, the dollar index is it's the United States dollar in comparison with a basket of different currencies. It's really tough to take a look at that and see how the dollar situation really is, because every single dollar that is being traded amongst the world is fiat dollars, and that means dollars backed by absolutely nothing. So, nonetheless, thank you all for watching this video, commenting, rating, and remember, have yourself a magnificent day and a magnificent week. Bye-bye, everybody.